What's going on, everybody? What's going on, everybody? We're back at it again. Back at it again with another Trade for Yourself podcast episode. I hope y'all missed me. Hope y'all missed me. It's the first time that you've seen me in a week. You know, I'm glad that everybody is coming back again for another week. Okay, please like, please subscribe. You know, please make sure that you share this episode out with multiple people because that's extremely, extremely important. That is extremely, extremely important, right? So let's go ahead and get into this episode real quick. So I appreciate everybody again for joining another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So please like the video. Please like the video. Please subscribe, okay? Please make sure you are hitting that notification bell in the corner next to subscribe. So every time I pop up, because I could possibly pop up on YouTube and give you some game, you know what I'm saying, on a day that's not Wednesday. So please make sure that you hit that notification bell, okay? If you are listening to this on podcast form, please leave a review. Leave a 5-star review, and let the podcast community know that I am giving good resources and I'm giving good analysis in terms of the stock market. Now, before we get into anything, please, disclaimer, I am not a financial advisor, nor am I a fiduciary. Okay. I do not manage money professionally. Okay. I'm not an economist. So please, please do your own research before investing into any stock. Okay. Now, this episode, we got to bring the largest company in the world back into the fray. Okay. Apple, ticker symbol AAPL. Now, in this episode, we're going to answer the question, can Apple reach a $3 trillion market cap, right? Can it get to 3 trillion? Okay, right now the market cap of Apple is about 2.78 trillion, and Apple stock has been going on a tear, and Apple stock actually got upgraded today in the stock market. And Apple has really given us a lot to talk about, you know what I'm saying, with everything that's going to be going on with the company over the next month and a half, and really throughout the remainder of 2022. So this episode is going to be all about Apple. Now, for us to go ahead and get into everything, I'm going to share my screen here, and we're going to go through some things here and see what is going to be going on with this stock. All right. What's going on with Apple stock? Now, the first thing we're going to look at is we're going to look at this article right here. This article was created by Barron's, and there are 4 reasons why Apple stock just got upgraded. Now, Apple stock has been on a tear as of late. Like, it's been going crazy, right? Apple stock is probably 35% from where it was in June, okay? And it's about that time for shares to get upgraded. And now what will happen is now Apple was one of the best performing stocks in the Dow Jones today, in the S&P 500 and the NASDAQ, because the Dow Jones was negative, the S&P was negative, and the NASDAQ was negative. But Apple was still positive. Why is that? Because of analyst upgrades. And when this tends to happen, institutional investors tend to file into stocks on upgrades. Same thing happens on the reverse side. When stocks tend to have a downgrade, right, people tend to sell stocks. Now, in a report assuming coverage on tech hardware companies, Credit Suisse analyst Shannon Cross raised the firm's rating on Apple to outperform from neutral, though the stock has fallen 0.1% in early trading Wednesday. In doing so, she offered 4 reasons for her optimism. Reason number 1, a lot of people use Apple devices, okay? Cross noted that more than 1.8 billion iPhones, computers, and the like are in circulation, which helped spur uptake of the company's services and software while also keeping them around as customers. By designing and building Apple software and services for Apple's custom hardware, the company produces a differentiated product portfolio with leading feature functionality, Cross wrote. Now, this is very, very important because I listened to the last Apple's earnings call. And on the last Apple earnings call, they said there was a 98% satisfaction for iPhone. 98%. You see, this is what Apple's moat is. Apple's moat, M-O-A-T, right? The moat is a competitive advantage that a company has. Apple's competitive advantage is their ecosystem. Once a new Apple user comes into that ecosystem, it's extremely rare for them to leave. On top of that, Apple has been talking about and they've been raving about their conversion rate from Android over to Apple. So people are converting from Android to Apple, which is exactly what I like to see. I like to see people coming over from Android into Apple. And all of my Android brothers and sisters, please come on over here to Apple. Come on over here to iOS because we're doing some big things over here. We're doing some very, very big things over here. And the one thing I want to tell you is very rare. Like, look, if you're in the chat right now, please reach out to me in the chat. Let me know. Have you heard of anybody leaving an Apple device going over to Android? I haven't heard it. I mean, maybe I have, maybe it has. Look, I'm not saying that it doesn't happen, but I think it's extremely rare for somebody to leave iOS and go over to Android. Number two, Apple's services business will help its profit margins. Apple's hardware business is great, but its services business is a real moneymaker. Cross noted that the company's services segment generates a gross margin of more than 65%, and she expects it to continue to grow as both a percentage of revenue and overall profits. Now, understand this services business, right? So when an app comes into the App Store and it's into that Apple ecosystem, so whenever, developers are creating these apps and they're getting paid, they have to give 33% of that profit to Apple. And that revenue share is continuing to grow. Apple is continuing to increase that revenue engine from its services business. On top of that, Apple has a $4 billion revenue run rate in terms of advertising. You see, I've talked a lot about how Apple is trying to get streaming rights. Apple has the streaming rights for Friday night MLB baseball. Every Friday, they get 2 Friday night games in MLB. They have the streaming rights for MLS, Major League Soccer. That will be starting next year, and that is a 10-year deal. Okay, they are in talks with the NFL to try to get the NFL Sunday Ticket streaming rights from the NFL, and they are trying to get the Big Ten streaming rights from the Big Ten because ESPN and the Big Ten just ended a 40-year partnership, right? Now, why is this important? The reason why I think Apple getting these streaming partnerships is important is because, number one, when you are streaming, you need a device to stream with. Right. And if Apple has the streaming rights, 9 times out of 10, you're going to have an Apple device to stream with. That's going to increase your Apple TV purchases, your iPad purchases, sometime maybe your phone purchases. Right. And if you do that, what is that doing? That's bringing more people into that ecosystem and getting more of your products. Right. In addition to that, like I just said before, Apple has a $4 billion advertising business. So now if they have the streaming rights, that gives them the ability to advertise during these games, because I'm telling you, that's a big business, because Apple pretty much hurt Facebook's ability to advertise. They hurt Facebook's ability to advertise because, as people that have iPhones may notice, with the new iOS updates, when you download a new app or you open up a new app, it's going to ask you, do you want things to be tracked or do you not want things to be tracked, right? A lot of people are going to say that they don't want those things to be tracked. But if you think about it like this, just because other companies are not able to track that data, it doesn't mean that it doesn't mean that the data just goes away. It means that Apple has the data, right? Apple has the data. If you notice, if you are an iPhone user and you go to your app store, and you type in the name of an app, right? When it comes up, there's going to be one app that's at the top. That app, like the next time you go there, type in whatever you want to type in. If you type in, calculator, if you just type in calculator in the app store, there's going to be a calculator app at the top, and right in small print, you're going to see ad. the developers for that app, you know what I'm saying, gave Apple money in order to be able to have their app at the top. So they're generating ad revenue through the App Store, and they're going to be generating ad revenue through all other devices. And if they are able to gain more streaming rights for sports, that's just going to increase that ad revenue potential. Now, number 3, overall margins aren't too shabby either and should continue growing. We estimate gross margin will continue to trend around 43%, with inflation and currency headwinds offset by higher services revenue, growing double digits is what we like to see, growing double digits year over year, and vertical integration of components cross-said. Now, on the earnings call, Apple still said that there is strong demand for the iPhone 13. And next month, Apple is going to be rolling out the iPhone 14 in addition to other products. So we're probably going to see the new Apple Watch. We're probably going to see the new iPad, maybe a MacBook, maybe a new HomePod, maybe some AirPods. And that one device that I'm looking for those glasses, y'all, those glasses. Like, I really, truly don't think that people understand how important those glasses are going to be. Like, those glasses, the AR, VR headset is going to be very, very important for the company. Number 4, Apple has a ton of cash. Apple is sitting on about $192 billion in cash, which should allow it to do whatever it needs to do to drive returns. Need to do some R&D, research and development? No problem. Return cash to shareholders with dividends and buybacks. Easy peasy, right? Adding value to shareholders, right? Making acquisition, sure thing, as long as they can get regulatory approval. That's going to be the main thing. But Apple, you see, that's the thing about Apple. Apple having all of that cash, Apple is trying to make strategic acquisitions, because again, on the previous earnings call, there was an analyst that asked Tim Cook about acquisitions. Tim Cook said that the company is very, very open to acquisitions, but the one thing I'm going to tell you that Apple is going to be doing, Apple is concerned about the intellectual property. They're trying to gain intellectual property, and they're trying to gain more talent, right? They're trying to gain intellectual property and gain more talent. Why is that important? That's important because a small venture capital firm, Apple may be able to scoop up a small venture capital firm without them becoming disruptive to the business. That's what makes them so powerful, by having $192 billion in cash, right? Add it all up, and Cross sees Apple stock hitting $201, up 17% from Tuesday's close of $172.03. That's all well and good. Our only problem with the call, which likely has more to do with the timing of Cross assuming coverage of the company, is that Apple stock has gained 32% since bottoming on June 16th. With the upgrade, 79% of analysts covering the stock now rate Apple an overweight or equivalent. Is it too late to chase? And this is what I said on my Instagram today. And if you want to follow me on Instagram, follow me at Mr. Devon Elder, MrDavonElder. And on Instagram, I said that Apple is a great company. The stock has been upgraded, but right now is not the time for you to be going to purchase this stock because it has ran so much. So now what we need to do is, now we need to stop sharing this article right here. And now we got to go to the chart. Okay, so let me pull up this chart really quickly here. And if you've been rocking with the Trade for Yourself podcast for a while, you notice that this isn't TradingView. This is not TradingView, y'all. This is Thinkorswim. Okay, Thinkorswim. TradingView is definitely good. I like TradingView. I'm not saying that I'm not going to be using it anymore, but I want to really truly see what the power is with Thinkorswim. So right here, you see this chart, right? We see this chart of Apple. And the reason why I said you shouldn't be buying this stock right now is because it has ran up so much. So the low is $129.04. That low occurred on the 16th of June. And the stock is up, like the stock is up over 34% since that time frame. Like it's up so far. But this is really truly what I want you to be careful of, right? I want you to be careful of this. There is a technical study that we like to use in charting, and that is the RSI. What is RSI? RSI stands for Relative Strength Index, right? And what it does is it registers, pretty much it tells you if a stock is pretty much considered overbought or if it's oversold. When the RSI drops near or below 30, is considered oversold. So that's an area where you would probably want to buy the stock at that area. When the RSI is at 70 or above, that's when you would want to sell any stocks. Now, if you're a long-term investor, right, this is just as a long-term investor, you don't want to sell just because the RSI is above 70. And when I say sell, I'm talking about from a trading perspective. From a trading perspective, it might be a good idea to sell if the RSI is above 70. But even if you're a long-term investor, you don't want to add any more positions when the RSI is above 70. You just don't want to do that, right? A trader either. You don't want to trade or add on any size or add on any risk when you see the RSI above 70. Now, this is what I want you to keep in mind too. The all-time high for Apple is $182.94. And if you go back to November and December, when Apple was running above that 70 mark, eventually it pulled back, right? Eventually it pulled back. So that's why I don't want you to be purchasing this stock with that RSI that high. Now, I want to answer the question. What is the question of the episode? Can Apple stock reach a $3 trillion market cap? Now, before we can answer that question, we have to ask the question, what is market cap? Okay, what is a market cap? So market cap is the market capitalization of a stock, right? And pretty much the market cap is what the stock is trading for and what the market feels like it's worth, what the market feels like a stock is worth based on what it's trading. So to get the market cap, you would take the share price and you would multiply it times the shares outstanding. That will give you the market cap for a stock. Now, when you look at market caps, you've got categories for market cap. You've got micro cap, which micro cap is when you're dealing with stocks that are underneath 1 billion. Okay. We don't really want to be messing with stocks with a market cap less than 1 billion because you could really truly get ate up right there. Small cap, you're dealing with stocks between around 1 billion to 10 billion. Mid cap, I would say, is around 10 billion to 10 billion, 50 billion, 60 billion. You know, large cap, definitely above 100 billion. If you're above 100 billion, you're definitely a large cap. And your mega caps, that's like 500 billion, 1 trillion, right? 2 trillion, right? 3 trillion, right? Those are your mega caps. That's how we categorize you based on what market cap you are. Now, what will it take for Apple to get to a $3 trillion market cap? Now, right now, the stock is around $174.55. It's been on a crazy run. So the first thing is Apple's got to get back to its all-time high. It's got to get back to its all-time high first before it can reach that $3 trillion market cap figure. Now, to get to that level, Apple only has to go up another 4.5%. About 5%. Apple really only has to go up another 5% to get back to that all-time high. And what I will tell you is that from a technical perspective, it's been a long time. It's been a long time since Apple has been up around these levels. Apple reached an all-time high on January 4th. It got up to about 179.61 on March 30th. and it's been declining since then. But now we are back on the uptrend. We have a big uptrend on this stock. So now this stock is far out of bear market territory. This stock is not in bear market territory at all. So now we can say, okay, the stock is looking more bullish. The stock is looking more bullish right now. Now, this is what I want you to understand. So from where it is right now, the stock has to go up. The stock has to go up about 7% from where it is right now. The stock is going to have to go up about 7% from where it is right now to get to that $3 trillion market cap. And that price is $186.67. And all I did was I took $3 trillion and I divided it by the shares outstanding to get the share price that we would need for Apple to be a $3 trillion company. Now, I think that me personally, I believe that when Apple gets back to that all-time high, I believe we're going to break resistance right there. I believe we're going to break through resistance and get to that $3 trillion market cap because it's a psychological thing. Like earlier on in the year, Apple was really close to that 3 trillion, but it never touched it. And so I think that the market wants to get Apple to that $3 trillion mark. Once it gets that $3 trillion mark, I think it'll go past it a little bit and then retrace. I think it'll pretty much be the same type of euphoria in the market as I like to compare to Tesla, because Tesla last year hit that $1 trillion market cap, and the stock just kept on running. But then eventually it retraced, came back down, and Tesla hasn't been up near 1 trillion in a while. Okay, but that's pretty much what we're looking at. We're looking at Apple to get that $3 trillion market cap. It's got to get to $186.67, and it's got to go up, about 7% from where it is right now. And I definitely believe that the stock can do that. And like I said, the stock will be running, like the stock has been running. So now one thing I want to do real quickly here, there's two more things I want to do really quickly here. And what I want to do is I want to draw our Fibonacci retracement. Okay, I want to draw our Fibonacci retracements, and I want to see where the stock is from a Fibonacci perspective. Let me get my fibs here together. I want to get my Fibonacci retracement stuff together because I want you guys to see something, and I want you guys to see kind of where I would try to get into a stock. So let me bear with me here for a second. All right, so let me pull up my Fibonacci retracement. And with this Fibonacci retracement, I've talked about this a lot, especially if you are a very, very strong member of the Trade for Yourself podcast community. So for our Fibonacci retracements pretty much like to give us levels, in which we want to get in and out of stocks over a long time frame, even though we could draw them for small time frames as well. But I'm going to draw this Fibonacci retracement from our all-time high all the way down to our year-to-date low, right? All the way down to our year-to-date low. So when we look at this and we look at our Fibonacci retracements here, when we look at this and we look at our Fibonacci retracements, I'm looking at this 78.6% fib level. Now we broke above this pretty strong. Like this is a pretty strong break above this level. And so really what I would like to happen is I would like for us to come back and kind of retest this 78.6 level. If we came back down and retested this level, held above it, and then moved higher, I would feel really, really good about Apple getting to this $3 trillion mark because we're still on that upward bullish momentum. Now, if we consolidated and came back down to this 61.8 level, I wouldn't be mad at it. I would still feel good about the stock continuing to be bullish. But if we come below this 61.8% fib level, I'm not feeling good about the stock being bullish anymore at that point. So these fib levels kind of tell me, you know, where I would like to get in and where I would like to get out of stocks from a technical perspective. Okay, that's just from a technical perspective. Now, one last thing I want to talk about, right? And so, like I said, on Instagram today, I said, look, I don't want y'all to go out here and buy Apple stock today because it has been running and it's been running for a long, long time. But I want to ask ourselves a question. We got to ask ourselves a question. What is the stock worth? Like, what is the stock worth? And so I want us to really, truly think about that when we're getting into companies, because when we get into companies, we want to get into companies on a discount. We want to get into companies on a discount and we want to buy them undervalued. If we're buying stocks on a discount and undervalued, right, that gives us the best opportunity to get the maximum amount of return that we can get. Because at the end of the day, this is a game of returns, right? The stock market is a game of R&R. R&R stands for research and returns. Those two together will make you a dangerous person from a stock market perspective. Now, in order to understand what a stock is worth, I'm going to tell you what I do to pretty much see what a stock is worth. So in order to see what a stock is worth, I use the PE ratio. Okay, what is the PE ratio? The PE ratio is the price to earnings multiple. Okay, the PE ratio tells you how much you will pay for $1 of the company's profit. So if the PE ratio was, for example, 23.22, you would pay $23.22 for every $1 of the company's profit. So to get a base case valuation for the PE ratio, you got to find the price, right? You got to be able to isolate a particular price. To isolate that particular price, you would take the PE ratio, P over E, and you will multiply it times the E, right? Multiply it times the E. The E is your EPS. That's your earnings per share. And I'm talking about your annual earnings per share, right? So you would take the PE ratio. And when I'm talking about the PE ratio, I mean the forward PE ratio. Okay, what is forward PE ratio? Forward PE ratio is the PE ratio that analysts expect the stock to have over the next 12 months. Over the next 12 months. So what I want to do is I want to purchase a stock at a discount to its valuation over the next 12 months. So I'll take the forward PE ratio and multiply it times next year's annual earnings, next year's estimated annual earnings, and that will give me a price. So if you can see here on the chart here, I have a base case valuation of $150.47. How did I get that? The forward PE multiple for Apple is 23.22. It's 23.22. And I multiplied it times next year's earnings. So 2023 EPS, that's $6.48. That gave me $150.47. Now, where did I get these numbers from? I have a Fidelity account. And the good thing about Fidelity is that it gives us analyst research reports. And so the Zacks Analyst Investment Research Report gave me the forward PE metric and also the estimated EPS analyst for next year. So right now, I would not want to purchase Apple unless I could get it for $150.47. And for a margin of safety, I would take a 10% discount to the base case valuation. So that would put me down here to $135.42. Now, if you look at this chart right here, you can see that Apple was even dropped below a 10% discount. Apple was actually trading for up to a 16% discount to its base case valuation just 2 months ago. Okay, now this is a base case valuation. So let me give some disclaimers here very quickly here. This is just a base case valuation based on a metric that I think is good, right? This is just a metric that I think is good. in terms of measuring what a stock is worth. Now, a stock could be worth more than 150.47, or it could be worth less. On top of that, I also want you to understand this: stocks are not going to be trading exactly for what it's worth at a given point in time. It's never going to happen. A stock is not going to be trading for exactly what it's worth, because price movement varies for so many different factors other than what the stock is actually worth, right? And so the one thing I want you to understand is that analyst research is going to be updating all the time. And so if there's a stock that you like out there and a stock that you want, and it's not in that base case valuation metric, what I want you to do is I want you to wait until the next earnings report. When the next earnings report comes out, there will be more research that comes out about the company. At that given point in time, you can then update your base case valuation and update your 10% discount, right? And that's 10% discount, 20% discount, 30% discount. This is giving you areas where you can purchase the stock. And so that's just what I like to do, and that's what I like to see whenever I am purchasing stock. So again, if you have any questions, please reach out to me. Please let me know what you've got going on so we can really truly give you the tools that you need to be successful. So again, I appreciate everybody for tapping in again to the Trade for Yourself podcast. Please please subscribe, please make sure you share, hit the notification bell, let people know what's going on. Look, if you want one of these t-shirts, don't pay for it, trade for it. If this is a brand that you want to be a part of, okay, please go to www.tradeforyourself.com and you can see all of the codes that I have. Look, please go out there, grab you a couple of t-shirts, grab you 3 or 4. Why? Because we've got free shipping on all orders. So this is really truly the opportunity for you to let people know how you feel and what is important to you, and you are making sure that you are making building wealth a priority for your life. All right. So as always, don't pay for it, trade for it. Catch y'all on the next one.